But what to make of the market mood right now, and where do we go from here on? Sachin Shah, the Executive Director and Fund Manager at MK Investment Managers, is joining us on the show right now. Sachin, hi, good to be speaking with you. What do you think is the most important monitorable for the market right now? Because the earnings season has been a bit sideways. Don't know what to expect from the budget. In context of that, do you anticipate a time-wise correction to continue in the near term?
Yeah, hi. Thank you for having me on your show. So yes, as you clearly outlined, we are in the midst of an earnings season. We have Mr. Trump coming up very shortly, in less than next maybe 1 week now, and maybe what kind of announcements that he makes, particularly on some of the tariffs and whatnot. So that's again going to be I think a very an important event to track for, and then of course budget, right? So there are quite a few events, I would say, and things that are going to pan out, including the quarterly results in the next 2 to 3 weeks. So I think markets may remain a bit sidelines during this phase. Investors would like to get more clarity and be very sure where they want to invest, which sectors they want to allocate money incrementally. Yeah, from that perspective, yes. At the same time, I would also like to believe that the kind of the correction that we've seen in the overall broad markets and quite a few good company stock prices also, there are already some opportunities to keep on chipping in at every because some of the stocks have already come at very reasonable valuations, which was not the case till a quarter back. So I think there will be selective investing, but a big trend in terms of higher equity allocation will probably take some time in the mid of Feb.
All right. Hi, Sachin. Very good afternoon. This is Shrishti also joining in. So you were just talking about that doesn't mean that there will not be any opportunities. So why don't you talk to us? What are the opportunities that you are looking at this point in time?
Sure. So, we believe that some of the private sector banking today at the current juncture are probably trading at very reasonable valuations. There have been, I would say, particularly the leaders in the private sector banking, I think the kind of the franchises that they have, the deposit growth that they are, the kind of the deposits that they are mobilizing is also very, very encouraging. So, and of course, the asset quality over there remains very, very decent. So, the valuations have, I would say, there's been a decent amount of time value correction in the valuations in some of this private sector banking. So, that's definitely one of the space that we are fairly optimistic about if you take the next 2 3 years perspective.
Okay, point taken. So that's the view coming in on certain these pockets which are doing well. What do you make of the pharma sector right now? Because that has seen quite a bit of re-rating. In fact, one of the best performing sectors last year, apart from real estate. Do you see a bit of a reversal in real estate and pharma, or do you think the momentum will continue in both of them?
See, as far as pharmaceutical is concerned, I think it's there are multiple business segments within that. There are companies which cater to the domestic pharma segment. There are companies which cater largely to the US generics market. There are companies which are in the contract research and manufacturing, the CDMO space. There are companies which are now specializing into some of the specialty products for the global markets or the developed market. So I think you will have to segment each by each. At least from our perspective, we are extremely positive on the cramps in the CDMO space. We believe that that's a secular trend for the next 3, 5, 10 years. Some of the companies over there have already established their, I would say, the credibility with the global customers, and they are doing humongous amount of capexes over the. I mean, they've been doing it for the last 10 years, but I think in the last 2, 3 years, the kind of the capex acceleration that we have seen gives us confidence that the global customers are very serious about increasing their outsourcing from some of these companies in India. So that's definitely one space that we are very optimistic about. I think even some of the companies which have had a breakthrough in the specialty businesses in the developed markets, because which is a very, very high profitable market, a highly profitable segment, and it has a very high entry barriers. So companies which have already got some successes over there, I think they have a very high chance of building it even further and become a very formidable player over the next 5, 7, 10 years over there. So that's another space that we are fairly optimistic about. Coming to the real estate sector, I think the consumer sentiment over in terms of the demand continues to still be fairly decent. If you see the volumes across most of the cities, at least the top 7, top 8 cities, continues to be fairly decent. Supply also continues to keep on coming on. So I think real estate overall also should do reasonably okay.
All right, that's the take on the pharma and the real estate pack. But Sachin, what about the consumption theme? Because there, the discretionary spending plays have definitely been doing better. Whether you see some of these white good manufacturers, other than that, the jewelry counters have been doing well, despite the fact that there has been surge in the gold prices. What's your take coming in on some of these jewelry plays, Sachin? Because I believe that you also hold some of these counters in your portfolio. The news flow around is not that great, but do you believe that the valuation comfort is there in the jewelry counters and there's a long runway of growth from these levels as well?
Well, at least the funds or the PMS strategies that I personally manage, we don't own any of these jewelry businesses at this point in time. But there are the leaders in some of these businesses have proven over the last 2 decades that they have got a fantastic value proposition compared to the unorganized market, because it's there's a clearly organized players and the unorganized market. All the listed guys are definitely the organized part of the organized market. So the shift from unorganized to organized has been happening as a secular trend over the last 10, 15, 20 years. And there is no reason to believe that that will not continue, because there is clear value proposition from these organized players to the customers, and customers have now not only accepted it but embraced it. So incrementally, I think the young generation is very clear that they want to go to the organized players and do their purchases as far as the jewelry or some of those precious goods are concerned. So I think that trend will continue. Company specific, there will always be winners and losers. So one will have to be a little more selective over there.
Okay, be selective, but the structural theme is something which is positive. Thanks, Sachin, for making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.